Vision Fund, the $100 billion tech investment arm of Japan's SoftBank, notorious for owning the majority stake in WeWork, reported a record $26.2 billion loss today as rising interest rates and political instability whiplashed high-growth tech stocks. In the past 6 months, the tech-rich US Nasdaq index has lost more than 28% of its value, while regulatory crackdowns in China have wiped eye-watering sums of money off Vision Fund's investments there. SoftBank Group reported a total annual net loss of $13.15 billion, forcing some to declare a new approach of financial prudence and selective investing to minimize further losses. When it comes to new investments, we are being more selective, he said. As the world is in chaos, we want to make sure that we have plenty of cash, instead of making new investments randomly. Concerns over the company's strange corporate structure and myriad financial hits, coupled with the advent of the COVID-19 pandemic in early 2020, saw WeWork's value tank and led to Vision Fund posting an annual loss of $18 billion in May 2020. At the time of the loss, Sun announced, "We made a failure on investing in WeWork and I've been admitting that several times I was foolish." This week, Sun said the group has been able to reduce its risk exposure in China amid Xi Jinping's regulatory crackdown, arguing there were still great companies in China, but that SoftBank wanted to invest in smaller amounts. Sun's earnings presentations are closely watched for clues into his thinking about the future of his sprawling tech conglomerate. On Thursday, he repeatedly emphasized the group's financial prudence and the prospects for microchip designing company ARM, which SoftBank hopes to list in the United States. In February, SoftBank said the almost $40 billion sale of ARM to computing giant Nvidia had collapsed because of significant regulatory challenges over competition concerns, and it now plans to take the unit public. Amir Anverzadeh of Asymmetric Advisors said all hopes were now on ARM going public, but warned that a very high price would eventually prove damaging. "We suspect anything more than $30 billion for ARM will leave it overvalued and vulnerable to a likely sell-off soon after," he said. The Vision Fund has around 450 companies in its portfolio and made 43 investments during the fourth quarter. It is slowing the pace of investment in the current quarter as private prices lag the fall in public markets. While 20 portfolio companies raised funds at higher valuations during the quarter, SoftBank also marked down some of its unlisted assets, contributing to the record loss, in sectors such as consumer, fintech and transportation. Sun has described SoftBank as a goose laying golden eggs, but the pace of listings has slowed with one notable recent exception, Indonesia's GoTo, a holding company which was born as the result of a major merger between a ride-hailing giant and an e-commerce empire. but Goto's shares have been sliding continuously since the company was taken public last month. SoftBank also recorded, in its non-consolidated earnings, a 669.5 billion yen loss due to its SB Northstar trading arm, which had placed bets on listed stocks and derivatives.